All right, this is the class recording for the 4th of June here. I will be going over my trading strategy and confirmations. And without further ado, let's get cooking here. So, all right, like I said, today's class topic is confirmation on trades, right? I trade, obviously, ICT a lot, and I use a bit of retail concepts from my early days that I use as a foundational piece and a core piece to my trading as well. But yeah, there's three models I follow, right? A market structure shift model, MSS model, continuation trend model, and an inversion model, invalidation of imbalance entry. These two right here, this first and third one, happen to be very similar. They're kind of the same model in one, but I'm a little more versatile now because some days we don't get an FEG entry, some days we get inversion entry, which was what the case was today. Um, you say I'm well spoken. I am not well spoken. I speak too fast sometimes. Um, but not continuation trend model. If you guys don't know, you guys have known this. You can watch a strategy video. The strategy video goes over these two. This third one right here, I've just added recently. It's the same thing as this. The only difference is I'm looking for a different type of entry, which is what I'll go over. And yeah, class is recorded, right? Yeah, it is. Yeah. So the first model we have here, it's a classic one of ours. We've been using this for over a year. I think almost 2 years, maybe. I'm not sure exactly. But it's called an MSS model here. This is what a lot of ICT traders use, right? The main components: liquidity grab, major high or low, directional change in speed of price, sell to buy, buy to sell, retrace its fair value gap, order block, confirmation, respective imbalance to be retraced, entry, strong candle displacement off the imbalance heading into the direction of the MSS. So the three examples that I'm going to use today are just buy models. So you could always inverse it and just use it in a sell occasion. I'm using buy models for today's instance because we are trading at all-time highs. So I just want to use, current data and taking. I'm using trades that we most likely will take from here on out, being that we're trading at all-time highs until we reverse back down. But with the MSS model here, like the first thing pointed out is a liquidity grab. Liquidity is single-handedly the most important thing when it comes to the market and directional movement. If you always want to predict price, you have to base off liquidity. Liquidity is where you see price trade into certain areas of price to fill voids. Right, there's voids in the market. There's buy stops, sell stops. There's just liquidity. There's orders ready to be filled through price. That's what liquidity is. And what you do as a trader is you try to predict where that goes. I like to predict and anticipate. Liquidity just gives you an idea of where price could go. We've done that multiple times. If you follow commentary thoroughly, I mentioned draw and liquidity. Draw and liquidity is what I tend to usually think price could go to. But with the liquidity grab, pretty much what I'm looking for is I'm looking for a certain big, extensive, or big, massive high or low to be taken, whether it's an overnight session, Asia, right? Asia lows, Asia highs, London highs. It doesn't really matter. For me, it's just as long as the lower high is nice and extensive, whether it's being overnight highs and lows or higher time frame external low or high, that's what's important to me, right? And so once we do that, that's the first step into an MSS. You want to see price trade back down in terms of a buy model, which you then want to see structure develop and build, and you want to see directional change in movement. So what I mean by directional change in speed of price is when you see this low get taken out here, you want to see price shift off the low, right? You want to see price shift off the low that we create, and you want to see price have directional movement through the low that we create. So you see this low here initially, we buy back up, then eventually come back down to your second leg. This second leg here just only gives me more confirmation, being that we develop more and more structure. The more and more we base off a low, and the more we slowly start to turn around and you start seeing buyers pick up here instead of sellers, and you stop seeing the selling occur, that's a good indication that price could potentially shift. And for this instance right here, right, second low here, comes down, retest that low. But then we see a strong displacement move here, right, through buyers. That's what I mean by here. Directional change in speed of price. You want to see price stop making these lower highs and eventually turn around and start making these higher lows, which is what we start doing here, right? So we do that. In terms of an entry point, it is a fair value gap, right? Fair value gap is my bread and butter. I don't really use order blocks that much, maybe occasionally, but this could be exampled as a fair value gap or an order block. It doesn't really matter. Both work very well. I'm just very used to fair value gaps. But in terms of what I want to see price do, retrace, right? Retrace giving us entry. This retracement only allows us for a retest, which only gives more confirmation, right? Because whenever you guys see retest only give you one of two things: invalidation of potential move to come or validation of potential move to come. So when we see a retracement after breaking these lower highs, once we've got our directional change, once we've got our liquidity grab, this retracement here into this fair value gap gives you confirmation of potential movement to the upside, right? Because if we come back down here and we see price trade through this fair value gap here, that's a very, very bearish indication, being that this is a bullish imbalance, and we see price trade down through it, right? But if we do bounce like that, you know, this occasion, and more so than that, it gives you confirmation that we'll at least target higher short term, being, you know, it could be this right here or even further past that. And like I said, confirmation, respective imbalance, we trace, that's what confirmation is. Entry, strong candle displacement off the imbalance heading into direction. When it comes to confirmation, and you guys will see me talk about this for the trend model and the inversion model, when it comes to confirmation, it's the same thing every time, right? And hear this clear out, right? Because I mentioned this multiple times, but hopefully you guys understand. Confirmation is just a candle close, a strong candle close. So in this instance, we see retracement. My confirmation is through this buy sequence right here, and I'll show you an example shortly. But it's simply if you're looking for a buy model, if you're looking for a long, you want to see confirmation by respecting the fair value gap and closing back up over, right, to give you validation for that respect, right? Once you get that respect in price, that's like the cherry on top to this potential long here, right? And so an example of an MSS model here. Here's an example. So we were trading the 30-minute fair value gap last Friday, and we saw price, right, trade into this 30-minute fair value gap. We saw a bit of choppiness go on, but you saw this low here develop, right? In terms of where we developed this, so I believe it was through a higher time frame imbalance. I think it was either an hourly fair value gap or hourly internal low. So we swapped liquidity here, saw price shift off the 5, right? Initially had our, you know, low here, came back up, and then came back down here again, similar to what we did here, except through a 5-minute time frame, right? Initially bought up, sold off a bit, then it went back up here. If you look at here at what price did, we came back down, and we saw price rebalance off this 30-minute fair value gap. What we did then was we saw respect through price, right? We saw respect through price in this 30-minute fair value gap, right? We came back down here, filled up fully, then we saw price flip back up. This 5-minute right here, through this 5-minute reference, it's always your confirmation, right? This is always your confirmation, being that we closed over, right? So we saw price fill this fair value gap, then we saw a nice reaction off of it. This would be your confirmation in terms of an MSS model. If you guys are still unfamiliar, you can go to the strategy video. I have a whole video just talking about this. But when it comes to confirmation pure, it's always just a candle close for me, giving me, at minimum, short-term validation that price wants to respect this imbalance and just go off that. So we came down here, retraced, saw a nice candle close over, and this is what confirmation for me is, right? Just a simple candle close, whether it's the 5-minute, 1-minute, 30-minute, hourly, whatever it is. When you wait for that candle, you know, when you're looking for confirmation in terms of these type of entries, you always want a candle close, a good candle close, and the direction that you want to see the long pan out, right? So you want to go long off this 30-minute fair value gap. You want some type of confirmation. You want some type of buy sequence here that's nice and strong to give you conviction in price delivery, respecting this fair value gap, if that makes sense. A bad example is something like this here, right? So you see this example right here. No liquidity grab, no change in sentiment and speed of price from bearish to bullish, no proper FEG retrace and entry. So you see price, you know, for instance, form a low here initially, and then what you see price do here is come back up here, right? Then retrace, see a bit of displacement, then come back down. What people sometimes tend to do is they view this as a potential MSS because we created a first low, now we're sort of creating the second low off this fair value gap. The reason this type of trade here would not work, and I feel like sometimes people take because they see this second low get formed here, and they're like, okay, this could potentially be an MSS, right? Because we took liquidity off the initial move. Now we're coming back down here for a retest. But this is not the proper type of entry, being that A, delivery is horrid, right? If you look at price and what we did, we swept this internal high, came back down here, displaced aggressively into this 5-minute FEG, and at one point in time, did you get proper confirmation? That was deliberate. When it comes to confirmation, it always has to be deliberate for me. If I see a wick, if I see sloppy delivery, I do not take, right? That's why sometimes you see me take a trade versus not take a trade, is because I'm always looking for deliberate execution through the respect of this fair value gap, right, in price. And for this instance right here, never got that, right? You saw the candle close over, but never got deliberate, sharp, convincing displacement here, right? So when you see pressure like this and you see us trade through a fair value gap like this, this is never a good confirmation, right? And in terms of stops also invalid. Whenever you place a stop, you always want to place a stop either the invalidation point slightly under of a fair value gap, or you always want to place a stop through the relative low. Say this leg right here. So in terms of stop loss, it's always important for you to always base off a good area of interest and price where if you do get stopped out, you're like, okay, you know, if we tag this low, if I get stopped out, it makes sense for us to reverse back down here. And so yeah, here's the example. This is not what you want to do. This is something you do want to do, right? You want to see proper respect. Wait for that deliberate, strong candle close for confirmation. Boom, there it is. Like I said, this is a 5-minute example. We also do the 1 minute, right? Sometimes we take, I give you guys a 5-minute setup, but we take off a 1 minute close. And so yeah, what this is right here, right? Like I said, bad take because this is not even a fair value gap here, right? And this trade looks silly, I know, but I do have to use this example because there's a lot of newer people in here, maybe a bit more inexperienced. But you have to recognize these factors, right? The main factors being liquidity grab, directional change in speed of price being convincing, and you want to see a proper fair value gap entry in terms of an MSS model as we go over here. We never got this once here, right? Not a proper FEG, not no massive liquidity grab here that we came back down here properly validated, and we never got thorough and complete respect in price, right? And delivery, right? We saw a sharp sell sequence here, never got proper validation. And yeah, so in terms of a trend model here, right, main concepts, strong directional move after already delivering MSS, trend, entering confirmation, retrace into fair value gap, / order block, strong displacement in the favor of trend. You guys see a similarity here, right? Already, right? You go back to here, strong candle displacement. Retrace, strong displacement, right? So you see the similarity already. You guys can see my confirmation. It's always the same thing, always whenever it comes to these three models. I always want to see respect in my trades. So if I take a trend model take here, say we already developed the MSS sense, say we already made the move, but now you want to catch a piece of it and you want to catch the trend. What you're doing here is you're waiting for a proper fair value gap retracement, order block retracement, and now what you're looking for is proper validation. What is proper validation? See this 5 minute right here? Right. Whenever you take a 5 minute, or whenever you take a 5 minute entry, right, you always want to see a 5 minute candle close. Say you feel extra bullish, right? Say you feel price is extremely bullish through just delivery or where we took our low, where we put in our low, or how we delivered that MSS. You could always do a 1 minute candle close. So for me, it's always right. Respect, right? Strong displacement. Strong displacement just gives you that confirmation for entry. That's what it is always for me. You look at the alerts, you look at the commentary. For me, and there's times where I lose, right? There's times where I give an alert out through a candle close that looks very nice, but it doesn't go our way. That's just a part of trading. But then there's times, like we've done about the past month or so, where every single trade that we've taken has been flawless, right? We have not lost because we wait for this confirmation. There was a period yesterday, if you guys recall, all right, and I'll go back to it. Alerts, right? Where I believe it was here. Prior to our actual take here that ran very well, we actually were looking at a potential trade here where we wanted confirmation, right? We talked about it. If we don't go proper entry, you could enter long through the break of the relative high, similar to an inversion take, speed into that high, good move, and you could ride and trim along the way to that fair value gap fill, right? So I also said this is why closes are important. Confirmation for me, in this instance, 1 minute candle close, right? If we see price pick up and speed up into that relative high, and we see a 1 minute candle close over, that gives you the indication that a potential buy sequence will come. Just like this here, right? Just like with this right here, retracement, we get that candle close over back up. It gives you indication, at least short term, that price still wants to seek higher, right? You just go back to simple retail concepts, buyers versus sellers here. If we trade into this, quote unquote demand zone, you could reference that as demand. We come down here, but we never get confirmation that price truly wants to trade off of it, and you just take off the tap of it. That's not really you taking off, proper validation, proper confirmation, because price still hasn't signaled to you yet that it wants to seek that continuation. But when you get that confirmation being that candle close, like we talked about, whether it's the 1 or 5, a good strong candle close, with speed, that gives you that confirmation that price wants to see movement to the upside, at least short term. Which is why you always see my trades, more so than not, always in the money, especially recently. We always see our trades in the money. And in the green, because as soon as we take confirmation, we're taking with speed. So we're taking as price is already speeding up, meaning that the probability in us seeking validation to upside is right away, right? Because we got that confirmation. So yeah, here's a good example. This is I think this was either CPI or NFP. We created a 5-minute gap here where we saw price retrace into. In terms of the trend model take here, this is another 5-minute example. What you would have done here is seeing that we sort of saw price come back up here or come back down here into this imbalance. We saw near the CE, the midpoint here, get tapped into nicely. Then what we saw price do was we saw price we saw a nice proper validation close over. We saw, after buying up like this, we saw price retrace into this imbalance. Then this candle right here, if you wanted to be extra safe, you could have obviously waited for here or used 1 minute as confirmation. This 5-minute candle closed over this fair value gap again, giving you confirmation that price most likely wants to rebalance higher. And so for me, whenever I do take trend models, and they've been less recently, whenever I take them, it's off immense conviction, right? So what I need to see price do a lot is I need to see price already trading to the upside massively for me to like a trend model take. That way it shows me that price is completely deliberate and directional in one move or in one side. And so when I take these type of trades here, I don't want to hesitate at all. I want to make sure the trade I do take is off good speed and price. And you guys see a constant theme here: speed and price, displacement. That's always a big thing. And so we see this candle close over. Boom, there's your entry, and boom, you can see as soon as you enter, you had zero drawdown. You saw this trade hit in the money instantly. These type of trades are the best. In terms of stop here, massive stop, right? But this is sort of a bigger time frame reference, right? To this CPI, to this whatever it was, CPI NFP candle. This is a bigger time frame reference. Obviously, we're not going to have as wide of a stop as this, but this is just a reference of what could potentially be if you just take off a higher time frame. We are used to smaller time frame. This is just an example through higher time frame. You could have honestly placed stops off the midpoint. You could have placed stops off this relative low. Regardless, this would have panned out regardless of what your stop was. It would have went your way either way. So in terms of a bad example, here it is. We see price come up here, right? And after for a good move, more so, you want to see price, you want to see an entry for a trend model B after a large amount of displacement here. You can see in this invalid take, there was no proper displacement here, right? We saw a 1 minute time frame here deliver a few green candles here. What we then see price do is we see price retrace into this fair value gap here, this 1 minute fair value gap, to which we never got confirmation, right? You look at price here. Did we ever one time showcase a buy displace back up? Sometimes, and I know a lot of ICT traders do this. Some ICT traders, what they do is they see a fair value gap, we retrace into it, they take instantly. I'm not that type of guy, because like I said, price delivery is a big part of my trading, a big part of my factor, and I feel like it helps you guys too as well when you take stuff away from this. Delivery is super important because ICT traders are heavily based off draw and liquidity. They always talk about draw. They never talk about price though. Price is what gets you to draw. Price delivery, what candles trade, how they trade is what dictates if we get to draw or not. And so for this right here, you see price come down here, tap to C here originally, but never get full confirmation. We never got a candle close once, never showed proper displacement, and for this occasion, there's been times where I've, taken these type of trades here when I've been a little less experienced with these, but waiting for confirmation, and I've been doing this for such a long time. Just waiting for that confirmation, being that candle close over, or that strong displacement help here gives you short-term validation that price wants to at least see continuation of this directional move that we saw here, at least this relative high and further on, right? So you see price come down here, CE tap, lower. But now, like I was saying, we never got full confirmation here off this idea, which is why I completely invalidated. The good thing with the trend model takes that we do have is they're so clear. So you either always see them go in the money instantly or you see them hit stop loss instantly. That's the good thing about them. So you do know if you do hit stop on a trade, more so than not, you know why you were wrong. And in this occasion, if you take this type of trade, you know the reason you were wrong is because you never got that confirmation, being that buy displacement back up. So, like I said, difference example here, right? You wait for that confirmation here. You didn't wait for no confirmation here. That's what makes up these models entirely for me. And that's what gives me full faith and conviction in the trades that I do take, right? And for final, our final take is an inversion, or a final model is an inversion model here. Main components: liquidity grab, major high or low, directional change in speed of price, sell to buy, buy to sell, strong speed and delivery through opposite fair value gap / order block, entry, candle close over / under, invalidation point. I said under, being that if you do take a short, it'd be under. Or retrace into inversion, wait for candle close in the direction of favored trade idea. So you see the inversion here that I do point out if you ever do take off an MSS. The difference between an MSS and an inversion is you're taking off here, right? Instead of taking off a retracement, you're just taking through a break of a bearish fair value gap here. So when you see price displaced largely through a level like this, right? Or when you see price displaced largely like this, whether it's here or here, you see price create a bearish fair value gap, right? And so what traders do sometimes is they just take off the break here, right? So they, instead of taking here off the retracement, they just look for the initial break and they look for the inversion there, right? You look at the example here, right? This is the inversion that you're taking off. So opposite fair value gap invalidation equals inversion creation. Boom, you see price trade through it. As soon as you see that candle close over around here, boom, you take and you go for higher, right? Some instances, this is why I like inversions as well, guys, is because some instances you don't get an FEG entry, being that we see price shoot up here, but never got that right. We never get that proper retracement because price is so bullish, right? So sometimes price is so bullish to the point where it doesn't feel like it needs to rebalance off this 5-minute, so it just goes right away. So what you can do to offset that is you could take an inversion model, being waited for a candle close, that invalidates a bearish fair value gap, right? Whenever you want to go long off an inversion and you see a bearish fair value gap get invalidated, that's a signal that price is bullish, being that we took away bearish confluence, right? It's as simple as that. So a good example of it was the trade idea that we took that I alerted, which is very nice. This was a liquidity grab here off low, right? We saw price come down here, take off overnight low through London and Asia. Then we saw price shift here with speed, right? Like I said, most important thing, speed and price, speed and price, speed and price. We saw speed pick up here. Then what we saw price do through this candle right here was we saw price have a candle close over this inversion right here, this bearish fair value gap here, which turned inversion. Saw a nice candle close over. Boom, right away. Your entry's there. Trade's already in the money. Confirmation, candle close over. Boom, you see targets get hit right away. So you see the liquidity grab, right? An inversion model, for me specifically, typically more so than not, always has the same factors as an MSS model. It's the exact same thing. The entry's just different. We see the candle close over, right? And we see price immediately go in the money off the trade, right? Like I said, with speed, it's super important, being that speed just gives you that validation. That's why you see my trades, again, like I said earlier, always more so than not go in the money instantly or hit stop loss instantly, because it's always based off speed. And when you time speed correctly and you time price correctly, that's the most important thing, right? So it's just continuous practice. You know, if you're watching this and it's a little confusing still, it's just continuous practice. That's all it is. Because with this confirmation, it's pretty easy to follow, but it's also important to get all the other, factors involved. This class is mainly just going over confirmation and mainly just going over the type of entries that I do have. And you still have to puzzle in all the different pieces. But yeah, this is a good example here. This was a trade where I love, man. I mean, this was probably one of my most favorite trades in a while, because we saw price really deliver nicely off this 1 minute here, come down here, take liquidity, sharp displacement back up, boom, inversion model, instantly off that 1 minute fair value gap, took higher and saw a nice move. So in terms of an invalidation or an invalid inversion take here, right, there's no liquidity grab, no fluid speed directional movement off inversion, right? Here's your example. We're still creating lower highs here. Price has an inversion that we do create, but sometimes traders, what they like to do is they see that first inversion, they take instantly. You have to recognize that there was no fluid conviction in the inverse. The difference between this trade and this trade in terms of delivery is you see price be very deliberate and very fluid in terms of the move off low. You see price get swept off low, boom, higher, close over, and seek further extension. With this trade right here, we created low, which, we honestly don't even take off anything, right? We don't take off any major liquidity, created just a short-term low. Then we see price just initially trade back up nicely. But this right here, right, just gives you the indication that price potentially wants to seek a move back down. When it comes to inversions, you always want to see a nice candle close over, right? Good trading into that inversion creation and a good candle close over, just giving you the idea behind speed and price being sided for buyers here in this instance. In terms of here, never got that. Saw, a wick over, whether you took confirmation off here or here, never good indication, because this is a short-term low that we never took off mass liquidity. Never built any type of structure if you wanted to wait for extra confluence, or even right away, right? Never got that speed and delivery, and then eventually ended up seeing stop loss get hit, right? So short-term bounce, no liquidity taken in sight, no fluid conviction. So those are the two main components in terms of an inversion. Like I said, confirmation is always just a candle close in the direction that you want to see price favored. So, yeah. This is the last slide. I basically said, understand yet, confirmation equals strong candle close for short-term confluence in the trade. I only enter off 1 minute or 5 minute candle closes for confirmation. Important, right? So for example, if I post a 30-minute chart for potential trade, I am most likely always looking for a 5 minute or 1 minute candle close. If I post a 1 minute chart trade idea, I am looking for a 1 minute candle close. From here on out, I will be more detailed on confirmation, but I will not spoon feed. You taking partial responsibility in alerts forces you the need to know what I'm trading, prevents signal bots, and more learning. So, like I said, hopefully this helps a little bit here, but the main component with confirmation is just candle closes and directional movement in the favor that you want to see price, or you want to see the trade pan out. So, like I said, even if it's short term, even if it's a 1 minute time frame close, it gives you that short term confluence and conviction that price just wants to validate your trade even more. And so yeah, the reason, like I said, the reason I referenced the 1 minute and 5 minute for confirmation candle closes is because we are short term traders. We leverage hard, so waiting for a higher time frame close off an inversion is kind of tough since we leverage so much. So for me, a 1 minute close is good enough for me to take more so than not. So hopefully that makes sense. That's the class. If you guys got any questions, we go over it now. But yeah, I spoke a lot. My throat kind of hurts a little bit. Let me know if that clarifies it a bit. Okay. I just saw someone post something in chat. Okay. Here's your answer. Andres, you're 2 days into the room. There's your answer. That's your answer. Alright. Just keep practicing. Keep following along. Keep being as consistent as you can. You're only 2 days into the room, right? So you're not going to learn anything overnight. Like, you just saw me present a whole entire strategy. I did sum it up, but it's just practice, man. I mean, in terms of confirmation, like I said, it's always the same thing. You look at the alert today, it's just like 1 minute candle close, right? More so than not. Like I said, you go to alerts here. You look at our take today. Confirmation being speed into inversion creation and 1 minute candle close. You look at the model that we follow in terms of the inversion model, right? Same thing here, right? Speed of price into that fair value gap that we invalidate, which turns inversion. We did that here. Then that candle close over off the 1 minute for confirmation. It's the exact same thing with here, right? Except I referenced the 5 minute as an entry point because it was a 5 minute inversion. The only difference, this is a 1 minute inversion. So, like I said, the main reason I like 1 minute closes more than anything is because we're short term traders, we're scalpers, and we leverage hard. So I like a 1 minute candle close to validate us, and it's unique for every single day. But more so than not, I look for 1 minute candle closes. Yesterday, type 1 in chat if that helped for confirmation. Type 2 if you're still confused, very confused. Okay, let's go over the Q&As here. Difference between a BPR and an IFEG. That's a good question. The main difference between a BPR and IFEG is what do you call it? It's BPR's balanced price range. It holds an inversion and it holds a fair value gap inside the same zone. So a good reference for today, or even for yesterday, you go to the hourly here and you look at where we put in our low. If you remember the loan that we took, a main indication, and I went over in the recap to the loan that I took, was because we bounced off this hourly BPR. So we had a standard fair value gap here, trading in this zone, right? Then we also had a 1 hour inversion here, trading in this zone as well. Which then, if you look at what price did and where we bounced off of, it was off that zone, right? So 1 hour standard fair value gap, 1 hour inversion. That's just an inversion and a fair value gap trading in the same zone. That's what a BPR is. Lagging versus reversal SMTs. I'm not really, the only main usage I have for SMTs, or for SMT in general, is just divergence. I just like marking out divergence, and I just like marking out which indices leading it versus not. The main indication for me always is just watching short-term price and watching delivery through the 1 minute, right? Sometimes when you see through ES, you see ES deliver, a doji candle on the 1 minute, for example. Sometimes you see NQ deliver a full bull candle. That just gives you that small indication. Another good indication is watching lows and highs. You look at ES here, and you look at ES in this instance right here. Right? You see NQ create, you see N create lower highs here, and you see ES create higher lows. just gives you that slight indication that price on ES is slightly leading, and we see constant divergence flips. But if you just mark these out consistently, if you just recognize highs and lows, if you recognize price, delivery, and candle printing through price on a consistent basis, you'll be able to pick it up. So you see now that ES is slightly leading, and you see NQ slightly behind because we created a lower high here versus a higher low, right? So just an indication like that is what helps you with SMT. Entries and stop placements, we just went over it. We also go over in the trade recaps, right? So if you watch the trade recaps, like I go over every single trade I take, stops, take profits, and all of that. So just peep over the trade recaps. Besides your sexy light go, cost getting better. Yes, sir. Can you go over why you use candle and not the wick when marking a fair value gap? Do I do the wicks? I do the wicks for the. Here, let me use an example. This is a good fair value gap to use. So when it comes to marking a fair value gap, I always do it the same way always. Whenever you have a strong displacement move here, this is what the fair value gap candle is. What I then do is I just mark out the previous candle low, whenever it's a bearish fair value gap, a previous candle low, and the next candle high. And if it's a bullish fair value gap, which for this example right here, you mark out the previous candle low, next candle, or excuse me, the previous candle high, next candle low. That's all I do. So hopefully that helps. Does it work if it wicks over, or is it better? Candle close. Candle close is always better. The only time you guys see me enter like before a candle close is if we're like right on the brink of closing that candle, and like price just pretty much guarantees that it's going to close over, right? So like you saw today, where is it? Alert. You saw me today, and this is just a bit more of experience. You saw where I entered on ES. You see how I entered on the candle that's supposed to give confirmation, but I entered at the top of it because I practically entered at the very end of it, knowing that it would close. There was like what 2 to 5 seconds left on the candle. I just entered there, and then we saw price immediately shoot over. So I would more so rely on candle closes always to be safe. Especially if you're inexperienced, just go for candle closes. But if you have a bit more experience with the confirmation, you can look for just a good move and enter right before the candle close, just to get for that slight better fill. Your example earlier was a 30-minute fair value gap and use a 15, 5, and 1 minute FGs. For people that are behind a screen all day, what kind of time frame alignment would you recommend? In terms of time frame alignment, I always look for entries based off the 1 and 5 typically. If I ever use the 1530 hourly, it's always just based off higher time frame reads. And you look at for today's example, and you look at the trade that we took today, main indication on why I took the long that I did with you guys, alongside that 5-minute inversion entry, was because we saw price, I believe, was it ES or NQ that did this? Let me find it. I think it was ES. Yeah, it was ES here. But we saw price off the hourly here, right? Fill this imbalance in the morning. Then we saw a nice rejection back down. And then we saw price fill this hourly imbalance right here, which is not the greatest. It's very small. But we saw it get filled, right? And we saw it move back up here. So just, referencing higher time frame, I just use any imbalances to my liking, to my favor, to dictate my bias short term, right? Higher time frame, the only reason I use higher time frame is to dictate my bias short term and allow me to sort of think, okay, if we set in the low that we put in here, it's not for random reasoning. It makes complete sense. That way I know if we do seek reversal off here, it makes sense to go long, right? So that's why, I use higher time frame. And I use it for my game plan as well. I use it for commentary as well. But higher time frame is just an added extra confluence for your trade entry that you take off the 1 and 5 minute. So can you explain what's happening to price when we are looking for an MSS, the double bottom? But you don't always have to wait for double bottom. For example, for this inversion model that I showcased an example here, right? You can clearly see there was no double bottom here once we took liquidity, right? If you look at the MSS model that I showed, for example, I always look for a liquidity grab, then a second leg to potentially seek higher. I just do that. That's just me being very safe here, being that if we do create a second leg and we still see it bounce, that just gives you double confirmation and double structure that price could potentially want to seek higher. But there are instances where you still could look for, that one leg move here, sweep, boom, come back up here. That's why people favor inversion models as well, is because they're very, very quick and very easy to follow along with. And that's what we did here. So, when we take liquidity, you always want to see a nice reaction off low, whether it's the initial low or whether it's the second low. You always want to see a good move off a low whenever you look for long. So, yeah. I could make a video on confirmation as well. I don't know how better I can explain it, to be honest. I could maybe use different examples, but I don't think I could explain it any better than that. It's just same candle close. Candle close, candle close, candle close. And I'll be more deliberate from here on out, but giving you guys partial responsibility is a good thing because you guys take responsibility in your own trades, meaning you have to learn how to do it. I am not going to spoon feed you guys because as much as I want to, don't get me wrong, I want to, right? I want to spoon feed. I mean, I'm not hiding anything when I do these riffs. These are complete, clear and obvious. I showcase executions, showcase piano every day. I could really be deliberate and just be like, enter here, exit here. The reason I don't do that is because I'm doing you a disservice, right? Because if I do that, eventually it'll make traders lazy in here, and it'll make you rely on alerts versus you actually trying to learn. So when I give you partial responsibility, I give you guys stop loss, I give you guys where I want to enter, I give you guys targets, I give you guys commentary, all that good stuff. The only thing I don't give is deliberate go long here, is because I want to make sure that you guys hold partial responsibility, being that you're still learning while making money. Because if you are not learning, as soon as you leave this room, you will not be profitable. Simple as that. So, oops. All right, keep asking questions, guys. You guys can hear my voice kind of go because I spoke a lot there. Hopefully this helps though. It's like it is. It's just always a candle close over, right? Validation is just a short-term good candle close to validate the trade. What do you get for DoorDash? I don't know. I think my mom's gonna cook food, so I'll be good for today. Yeah, I bought my family like food like a couple weeks ago. It was like $150. No one took a bite. All right. I might pause the recording here and just answer questions furthermore in chat. But a good one. Not the longest, but I felt like it was definitely. It should definitely help you guys. Like I said, if you guys are still confused, it's either because you're newer or you're just inexperienced. You just have to be repetitive with your trading now. You have to consistently take the same trades off these models here and continuously improve, right? Because even for myself, when I first was utilizing these models here, like, it was still harder for me to get clear cut, exact model every single time. But over time, when you learn, you pick it up. So if you're still confused, like I said, someone mentioned them being confused. You're just 2 days into the room, right? 2 days. So it takes years to become profitable. I'm not going to say it's going to take you years, but you give it at least a month, So, yeah. All right, I'm going to pause the recording here.